Hello and welcome to the stock specific class here for Thursday, April the 13th. If you have any questions during the week or any questions I don't get to here in the live class, make sure you send those to Jerry at TradersPro.com. Also, if you notice any audio problems, any clicking or anything in the audio, let me know. I can usually dial back in and get rid of it. Haven't had that problem for a while, but don't hesitate to let me know if you're noticing something is off a little bit. All right, let's get started. Not too much has changed since Tuesday's class. You know, we did have the big day yesterday. Yesterday was supposed to be the big day that solved the market's problems. You know, it was the next thing. Well, we had two things yesterday. We had the CPI report came out before the market opened, and then we had the Fed minutes that came out later in the day. And what happened? Well, we didn't really do much, and then the focus is on the PPI that came out today, and then everyone's now talking about, well, the earnings season kicks off tomorrow with all these bank stocks reporting. You have JP Morgan and Wells Fargo, Citigroup reporting earnings, and that's going to be what gets the market going. And I was playing that game for a little while because early that's what does happen. The markets anticipate something, and then the news comes out, and they go trade it. They trade it up, trade it down. But what we've been seeing for the last several months now is just the whole thing is the focus on the next data point coming out, and we've been really choppy and sluggish and sideways for the most part, and so I'm just gonna ignore now all those reports coming out. I usually do anyway, but like I said, usually you pay attention to them because they do trigger movement. A lot of times news does trigger movement. I don't get caught up in trying to predict the direction of that movement. I just trade what I see on the charts, on the price action. But basically the trend has been sluggish and sideways. And I'm going to point out, though, bullish things to look for, bearish things to look for. There's plenty of that out there right now. And let's get started here with the direction alerts. First of all, we have moved up a little bit on the longer term bull market, bear market signal. We were a little bit over here, and now we've gotten to that -2, getting pretty close to switching over into bull market territory. Like I said, on Tuesday I'd mentioned that I think it'll get close, and then it'll probably sell off a little bit, won't come down. But again, my opinion means nothing. If it doesn't do that and it moves into that bull market territory, so be it. It'll probably mean that we break above some key resistance levels, and if that's the case, we'll go with what we see there and trade accordingly. By the way, I do have some, despite the sluggishness of the market, we haven't seen it drop. Every time it looks like it could drop, it's not dropping. It's not going up much either, but I am going to go over some trades today, and I'm going to add one to the portfolio. At least I'm planning on it right now. We'll see how things look when it gets closer to the time to make that decision. But not going to get crazy. We did add gold related stuff the last couple classes, and that's done pretty well so far. And that allows me to add some other things too, because if you're up a little bit, you could afford to pull back a little bit, and we're not taking on much risk. We're not going to load up the portfolio, but I did tell you we'll start to do something here, and not a ton to where, because again, the biggest thing I keep coming back to is in bear markets, you want to preserve capital. You don't want to, you try to make some money here or there, but you're mostly trying to keep your capital, because when things bottom out, you get into a new bull market, you want to have as much capital as you can to take advantage of that bull market. And since we're at the later stages of the bear market, we don't want to get wiped out or hit hard right at the point when it could be most advantageous for us to be able to get into some of these positions at the beginning of a bull market, or near the beginning of a bull market. We can't know where the actual bottom is all the time. Sometimes there's some strong clues that tell you you're really, really close, but like I said, there's a lot of things that are making this current market a little bit unique, and so we're trying to be as patient as we can, but we also don't want to just be waiting forever either. So I'm going to add a few things here. Again, we pretty much have the same problem here on the direction alerts as well. Again, you've got market sentiment, extremely complacent. And I pointed this out on Tuesday. We're extremely complacent in an environment where there's plenty of things that are really concerning. But those professional traders don't feel a need to hedge or to take defensive measures. And at some point, it's going to probably bite them. But trying to predict exactly when that is difficult. We just want to recognize that that's kind of what's happening here. Is they're getting overconfident. You've got momentum's pulled back a little bit here, but it's still relatively high. And then this is what we've really been bothered by, is the market breadth. There's not a lot of participation in the rally, and you want to see more of that participation, have more confidence in the rally. And now that could change. We could suddenly see the market start breaking out. A lot of stocks participate, and that's what we're looking for. That would be bullish. If we suddenly see, well, I'll tell you what we could see is, because these would stay elevated as well, but the market started to take off and breadth caught up, you could see a short-term run, but then that's where you'd say look out, because you can get all three of these now up in that extreme range, and breadth has kind of come in right at the end. That could be a signal that look out, we're getting ready for a market pullback, and maybe that's what it's waiting for. Maybe we're going to see a push higher. I've talked about this too, and we've looked at some areas. We'll take a look at it again today of what to anticipate if we do break out. But I don't know. I see it. I personally see a lot more just sluggish, sideways choppiness. One thing that we're really looking for, by the way, going into earnings season, is we're looking to one thing that happens during recessions is that these companies revise their earnings downward. They have these projections. They're always looking out, and they're looking out a year from now, 2 years from now. But obviously, if they're 2 years out is based on a good, strong economy, and suddenly the economy is starting to slow down, they're going to take those numbers and bring them back down. They're going to pull them back a little bit, revise them. And we haven't seen that happen yet. Again, this is a headwind for the markets, because they've been rallying ahead of this stuff taking place. And, you start to make the argument where you say, well, it's like the bulls right now saying that, well, the Fed's done hiking, or I think they're done hiking. And so they're going to, yeah, they'll hold them, the rates probably steady for a while. But the next phase is they're going to start cutting rates. And so that's the reason to buy right now. Buy ahead of that. Well, you were just a few months ago saying that kind of making that same argument that while they're raising rates, they're eventually going to lower rates. So you want to buy there. So in other words, you're always buying, and every reason you can always find a reason to buy, and you can always find a reason to sell. I could flip that over, and you've got bears out there that are always bearish and always finding reasons for things to go down as well. But that can be a problem if either this stuff is either so in other words, yeah, eventually we are going to be done going down, and we're going to go into a new bull market. We always do. Markets are usually in bull markets longer than they are in bear markets, quite a bit longer. The average bull market is a few years. Average bear market is a few months usually. And so in other words, what I'm trying to say is that everyone can always be right if your time horizon is endless. Yeah, eventually markets are going to go up again and go to new all-time highs again, and that could be 10 years from now. It could be 2 years from now. But just be careful with what I'd say is be careful with the rhetoric you hear out there, because I try not to sometimes I turn on my TV just to have some noise in the room when I'm doing my work. But there are some people that I think are pretty clueless that have these powerful positions on TV, and people listen to them, and just be real careful out there. But anyway, we're seeing this elevated. What I'm trying to point out is we're seeing this elevated these conditions where it's going to be difficult for the market to go higher. Technically, like I said, and a lot of it's been with you've got momentum and the complacency is very high, and yet we haven't seen these revisions take place yet. We haven't seen earnings projections come down. Now we may start to see it as we're entering an earnings season right now, and that was kind of my point at the beginning of this rant, was this could be where we start to see that. So not that we're going to listen to the fundamentals too much, but this is probably the period of time where we might start to see some of that play out in the market. Now, negative news hasn't played out either in the market. We're still stuck in the sideways range, and it could be another one of those things. Well, maybe this is what will shake us out of this. But this is what kind of keeps me in that camp of expecting the market more likely to pull back than charge too much higher. And now that could change. I mean, we had a pullback in the market that brought all of these indicators down. I could easily get a lot more bullish in that situation, as I should be. If it things kind of pull back, come back in, because I just know the way charts move. You get these, you have impulsive moves, and you have these corrective moves. I like to look for these pullbacks, and these pullbacks are usually pretty well defined. They're choppy, they're sluggish as they pull back, and that leads to another impulsive move up. And so, I want to be tightening stops up in here, selling and taking profits on these pullbacks, and then getting in after these corrections are done. I know this is an oversimplification, but what these indicators right here are telling us, momentum, breadth, and sentiment, is they're helping us determine where we are within that cycle. A lot of times when you're at the end of a bullish run, you'll get these indicators up here in the overbought area, and that signals that you're getting close to getting that pullback. When you get that pullback, these indicators move down here lower. They tell you, sometimes they'll slide into that oversold area, and they'll tell you when you're about ready to start possibly that next move up. Now, again, this is going to work a lot better when we're in that bull market condition, right? We're trending, majority of the market is trending up, but that's where these tools are going to be pretty valuable. So momentum is high, but not extreme. We already noted that. Breadth is what's worrying us. It's still you're not seeing a lot of participation, and then sentiment's still really high, and it's been high for a long time. Buy-sell ratios, here again, they're showing us we're not extreme in any way. We could go in either direction here. And then this other sentiment indicators pull back a little bit from that extreme. But like I said, the market started to charge up from here, and it's up today. So remember, this update's overnight. This should have a little bit of an uptick, depending on how much we rally today, a little bit of an uptick. And you're just moving closer to that overbought area. And you can see every time we hit it, the market pulls back. This is an indicator. It's not going to tell you a lot all the time. If you're basically anywhere in this range right here, it's really not telling you anything, except, hey, we could continue to trend in that direction. But as soon as we get up up close to that overbought area, it means we're probably getting closer to the market pullback. When we get closer to the oversold area, this is where the markets tend to rally. These are just areas where we start to pay attention. Again, and by the way, this is not an exact indicator that's going to tell you, hey, tomorrow it's going to start selling off or start rallying. But we don't base anything that we do on one bit of analysis. We take a look at all these clues, and if we start seeing the market behaving, getting stretched, and we're seeing, the indicators are flashing overbought, we get a bearish reversal candle on something that tells us that it could be imminent that we drop, we can start to piece these things together. And although we can't be perfectly accurate, it gets scary sometimes how accurate it can be, especially when we're not in a sideways market here. Question, do you think the major indexes are just a day or so run up? We'll take a look at that. I'll show you. We'll take a look at the charts here in a second. I thought the DIA and SPY would pull back down after getting into an overbought area, but they are staying overbought and going up more. Yeah, you can be overbought and get more overbought. Now we're not extremely overbought. So, if we go back to, even taking a look at what we just looked at right here with this indicator, we are overbought, but we're not extremely overbought. Could we run up for a couple of days and could we go even above this line a little bit? Absolutely. These indicators can't tell you exactly when the market's going to go up or down. So you've got to get that in your head right away. If you're expecting perfection, that's the problem. Nothing can tell you exactly. And I say that all the time. But sometimes it takes a while before it actually clicks for people. They're like, okay, I can't know. I've been searching. I've gone from this guru to this guru. I thought this guru had it figured out. And then I found out that it's not always right every time. And then this software looks really cool. It looks like every time it flashes this, something happens. And so you think it's always going to be perfect and flash it. And then you find out it doesn't. Hopefully at some point in time, you save yourself a lot of time and a lot of money chasing that perfection and just say, okay, it's like playing golf and expecting a hole in one on every shot. You're never going to see that. There's so much imperfection in golf. And what you want to do is master the imperfection. The best golf players in the world. This is why I love watching major golf tournaments, is because these are the best players in the world. And when they shake it out of bounds, it's like, hey, I can do that, But what do? Well, they're able to take that mistake and then hit a great shot the next shot. And they end up with par where I end up with 10 over par, when I play the hole. So you got to embrace the uncertainty. You got to embrace the imperfection. And then it's about managing it. It's about managing risk and managing conditions. And so we can't know exactly when the pullback is going to happen, but we can recognize when you have the conditions for it. And then that allows you to take action. What do you do in that situation? Well, you tighten up stops. You take profits off the table on positions that look like they might have run their course. And you make these decisions based off of those signals. Right now, we are in a bit of an overbought condition, so we don't want to get crazy with loading up on a bunch of new stuff. And in some cases, this would be an area where you could start tightening up stops and moving stops up if you wanted to do that. So, hopefully that helps a little bit in answering those questions. All right, let's get to the charts here. And again, I usually try to spend more time on Tuesdays going over the market update stuff. Now, on this chart right here, let me go to a 1-year chart. You might have seen me draw this trend line in that I'm kind of watching, because we're right at it. Come right up through here. I think I think that's about where it's at. We're kind of in the underside of that trend line, but then I also have been talking about this resistance zone. Now we're into that zone. We're up a little bit above this area right here, but we're still got this area right here. All right, so what I'm seeing with the market being a little bit overbought, but not extremely overbought, I could see a run into this area right here pretty easily. And not that it has to happen, by the way, but it could possibly run up. Let me take some of these lines off and just look at this right here. In fact, let's zoom in at that area right there. So the 6-month chart. But a run up into this area right here, and that could be a 1 or 2 day move. Now you've got the resistance of the chart. You're likely pushing those indicators back into overbought, maybe even extremely overbought areas. We're going to look at the VIX here in a second. The VIX is already down to 18 today. This is, again, I can't see the market going much higher. Now, again, it doesn't mean it couldn't go much higher eventually, but I can't see it going higher in that condition. What it's telling me is that, maybe we run up into here and then we probably pull back a little bit. And then maybe we pull back into here and then we alleviate that overbought condition. And then maybe the market does take off and go higher and start challenging these other highs. That's what I would pay attention to, is when it pulls back here. That what I want to pay attention to is, how does it pull back? Because if it starts pulling back and it's a move down for a couple of days and then tries to bounce and then a move down for a couple of days, alleviates that overbought condition, and then we see a kind of a bullish ABC pattern here. Okay, you're going to see me turn probably a lot more bullish at that point, and maybe it's slightly more bullish. And I'll probably still be cautious because of a lot of the longer term analysis I've already kind of gone over with you. I'll probably review it again at some point in time. But that would tell me that in that pullback, the way it pulled back would tell me that's what you'd see within a bullish. You're not seeing panic selling or aggressive selling. You're seeing more kind of profit taking in that kind of pullback. Okay. Now suddenly we had a move like this, where it just dropped sharply, and it dropped sharply down into this area here, just straight down. Okay, that could be telling me that, kind of that scenario where, this is a correction. This is a corrective move up after that move down, and that we're going to have that big sell off. Maybe that's kicking off that bigger sell off. So what I'm trying to point out is there's some clues that can start to show up, and we'll talk about them in class. I'll point them out to you. Again, it may not be that we can know exactly when a big drop is starting. Sometimes you'll get some clues ahead of time. It'd be harder to get clues like that ahead of time because of how whipside we've been over the last several months. We haven't gotten any. We might get some clues. Well, for example, you gotta. This is a big major reversal right here. I thought that in December was going to kick off a bigger sell-off. It did start one, okay, and then I thought this was a correction and you're going to get another move down. There's just no follow-through to some of these. We're getting some signals, but there's no follow-through. That it's dropped off of them, but not very far. Eventually, what will happen is we'll get maybe some clues, and then it'll be the big one, and so that's what can happen. It's going to lull you into sleep a little bit, to where you're like, it's just going to be. We're still stuck in the sideways range. It's just going to be one of those, we'll pull back, but it's probably just going to lead to another short-term rally back up, and we're still going to be sloshing back and forth. And it's probably about that point where, it's going to catch everyone off guard. I always say this: the market will tend to punish the most people as possible. It will tend to hurt the most people as possible. So if the majority of the people are thinking it's going to do one thing, it's going to probably do the other. And it kind of lulls you. It takes time, but this is what's happening. Is it's lulling us in. It feels like it's lulling us into something. Now it may be that it's lulling us into, we're into an uptrend where we're not expecting everything to explode to the upside. Maybe it is kind of starting to form a little bit of a bowl, and it's going to start taking off to the upside and work and come right back up to here, and it's going to catch everybody off guard. There'll be a panic buying taking place. I'll definitely miss the first move of that because that's not anything that I'm expecting. But I'd be quick to jump in and join it if that's what we're going to do. So be it. But in order to do that, we'd have to probably start clearing. Definitely have to clear this area up here at about 419, 420. That would give us a higher high. We already have a little bit of a higher low right here. So we also know so above here would be more bullish, below here would be more bearish. If we drop below here, we're probably going to very likely we'd retest those October lows. If we break above here, then we take a look at the next high right up here and say, okay, there's the next target. Can we get to that? Can we get above that? But again, this is where we're back to, can I get to here on one move with the market as stretched and overbought and complacent as it is right now? Again, anything's possible. Is it probable? No, not likely probable. So now it could get to here. And so that's what we're kind of focusing on right now. See how that kind of plays out. Yeah, you can use the Tuesday and Thursday classes. If you're not aware, we're focused exclusively on TradersPro and the TradersPro software. It's more of what we're looking for is in what kind of investment ideas, or it doesn't have to be a long term. It can be, some of these are trades where we'll be in them for a few weeks or so. We'll kind of try to ride the trend. We'll talk more when we really get into more of a bull market. We'll be talking more about the how to use the buy and sell signals, how to use the strength rank, and there's a system that I use that you just keep plugging things in. We'll put more things in the portfolio and things like that. And so we're going to be mostly using the TradersPro software. I do go into TradingView in these Tuesday, Thursday classes to show you the VIX, because the actual VIX indicator you can't pull up on TradersPro because you can't trade it. It only has the tradable instruments. We try to use the VXY, but it doesn't move. The chart isn't the same as the VIX, and so that's why I'll switch over there. But yeah, if you want to use an RSI indicator to indicate overbought, oversold, there's lots of different signals you can use for overbought, oversold. So, but all of them are the same, where you can get more overbought, you can get more oversold. The key is that you do want to pay attention to when whatever you're using, you do want to pay attention to when markets get stretched, so that you can make some of these decisions that I just kind of gone over with you over the last 10, 15 minutes or so, how you can kind of make those decisions based off of recognizing that. All right, so now the Dow, the Dow is right at a declining trend line right here. This is what I'm kind of watching. And it might even be breaking above that today. It was right at it yesterday and then had a bearish reversal candle right there. But there again, is a breakout. It's going to last very long. I wouldn't see it that way. Now it'll be interesting to see how things close, because right now it looks like we're trading near the highs of the day, but that doesn't always tell you everything about the strength of a move of the day. If sellers come in at the end of the day and push the price down, for instance, right now it looks like it's breaking that trend line, or it's right at that trend line. If it were to come all the way back down, back below that trend line at the end of the day, it could still be positive. We could still be up for the day, but that would tell a little bit of a different story. Now, I don't want to get too caught up in the short term. I don't want to base everything on short term signals, because most of these candle formations are just telling you what's the strength of the move that day. Some of them can tell you what's likely to happen the next day, but they're not likely to. They can't tell you what's going to happen, a week from now or 2 weeks from now. Now they can be used in combination with some chart patterns. You get if this is breaking, you have a trend line right here. You break out on very strong volume near the highs of the day. Yeah, there's probably not only a good chance that you're going to go up the next day, but there's probably a good chance that you'll come up here and test that high. You'll go up even further for a few days. You can use other things with those. But whenever you hear me talk about candle formations, well, and there was one yesterday. This is a bearish reversal candle formation at a declining trend line. It didn't go down the next day. I mean, these aren't perfect either. But I'd trade that all day long, because the majority of the time you are going to get some sort of pullback out of it, and especially in that context, where not only it wasn't just a bearish reversal candle, but you have the declining trend line as well along with it. Qs are up. We have talked about kind of this breakout area right here. It might be holding that. That might have held it right here. You'd want to see if it could break out above here, and then maybe it does. But again, it's breaking out in an overbought condition. Is it going to last? That would be the question mark there. Russell, now this will be important to watch for the next few days, because a lot of these regional banks are part of the Russell 2000. The beginning of earnings season, usually the first sector that starts to report are the bank stocks. That includes a lot of regional banks as well, although most of the regional banks, I think, are coming in next week, or starting to come in next week. Now, what I'm looking for is that, this is where I see some room where the market could move a little bit higher, is that this looks like kind of maybe wave A, wave B, and that we're in wave C. Now, typically wave C doesn't end at the end of wave A right here. Usually it'll go a little bit further. So I wouldn't be surprised to see, wave C come up maybe into this area right here. There's a little bit of support right there, a little bit of congestion through here. Could even, possibly up here, but that doesn't fit in. That'd have to be a big outperformance by the Russell in comparison with the other indexes, which could happen. But that would also probably happen if the bank stocks are their positive earnings. And I don't know, they could have positive earnings. The thing that everyone's really looking for is what affected that banking crisis that regional banking crisis have, especially on their projected outlooks and things like that. I think that's what most people are paying attention to there. And so anyway, that's kind of what I'm looking for. It doesn't have to do that. Could it drop straight from here? Yeah. But that's showing that there could be a little bit of a near-term bounce still in that index. Bonds are down a little bit today. We're still looking at obviously this breakout area here, and this low to hold. If we break below there, that'd be bearish for bonds. If we break above here, that'd be bullish for bonds. Gold has moved higher, broke out, had that GLD trade, so that's done pretty well based off of that. That's worked so far. Now, could I bounce? Can I raise my stop up a little bit? My stop is down here. I could put it right below here, but I don't see a reason to bump it up too close just yet. because if you want to give it some room to come back and forth a little bit, and I'm going to keep it right where it's at right there, but that's working. Gold still looks like it wants to go higher. It's not in the extreme reversal risk range yet. Yeah, I'll go over the portfolio. There's a question here about the portfolio. I'll pull that up here in just a second, and you can see what I have in there. Because I'm possibly adding something, and I'll go through that here in just a second. Oil has been up. It kind of broke out of this little sideways range it was in. We were looking at that on Tuesday. Yesterday, it kind of broke out above it. We still have this resistance area to deal with. It's kind of trying to deal with that, although the trend is still up in the near term. And so if it can break above, if they can clear this area right here, it might be that we continue to see a run in oil. What could stop a rally in oil is if we start to get more recession type data out that tells you things are actually slowing, and that could come in the form of earnings revisions from these companies that are reporting. So that's one thing to kind of look for. The dollar continues to move lower, big move down today, relatively speaking. Now we do want to pay attention to this low right here. And this kind of fits into our narrative as well. The dollar is had a tendency for the last, for a long period of time, of when it tends to go down, the market, it tends to be a little bit more bullish for the market in most conditions. That's not always the case, but when it rallies, it tends to be a little bit more bearish. So could we rally up a little bit further? The dollar maybe comes down into this area right here, and then maybe it finds some support, starts rallying. That's one thing I'll be looking for. Obviously, if it breaks lower than that, that would it would continue the downtrend in the dollar and possibly be a little bit more bullish for the markets, just especially for commodities, gold and oil and things like that. That's the other thing I'm looking for with that gold trade too. Is does the dollar get down here and then starts to rally, and maybe that causes gold to pull back a little bit in the near term? Maybe I'll take profits off the table at that point or something like that. We'll see. But you're seeing a lot of these charts that are like, they're showing, hey, a little bit more of a move in the direction, but then not that you're going to get a reversal, but they're key areas where reversals could take place. And so you pay attention for those clues that would indicate a reversal might be taking place. Okay. VIX, this gets back to, yeah, we're right at the bottom of 18. Here's 18 right here. Actually, that's maybe a little bit above 18. I just tried to draw. This is actually just a trend line to show, try to line up the lows down here. Here it went a little bit lower. But now we could get a market rally and the VIX just stay flat. Does it have to keep going down? But it's just, I can't see it making a huge move. Yes, the VIX can get down lower than 18. It can get down to 16 to 15, but typically that happens in bull markets and usually when bull markets are well underway. And that's not the condition we're in. So again, we're back to that possible, probable argument, and I just can't see things rallying too much further in this condition here. All right, let's get to some charts. Under the muscle stocks here, the new buys, there's only a couple, and some of these might need a little bit of confirmation. One was this STKL. Yeah, this one definitely needs some confirmation, but I pulled this one up because it does look, I do like that kind of basing. It looks like it's come down quite a bit off the highs. Now you got lower lows and lower highs. And here you have an equal low. You didn't go to a lower low, you had an equal low. Okay. Now, it doesn't mean that Sometimes could be an argument that was like a little bit of an equal low, although it was slightly lower right there. But what you'd look for is, can we break to a higher high? Have possibly an equal, maybe even that. Actually, that looks like a little bit of a slightly higher low, ever so slightly. Could we get a clear higher high right here? So this is one you might maybe want to put in a watch list to see if it starts to turn, maybe start to turn the corner. And an easy way to, if you want, even wanted a little bit more of an aggressive way to trade this would be, as soon as it breaks to a higher high, then use this as your stop down here. This is where I know I'm wrong. And just that risk right there, now you'd have to be okay with the amount of, how much would you lose if you were stopped out, okay? But just eyeballing it, it looks like if it were to work its way back up to this previous high, you've got about a 2-to-1 reward risk. I can make roughly twice as much as I would risk. So if I'm risking $1, I'd have a chance to make $2 just getting back up to this previous high right there. That's what kind of stood out to me on that chart. So, and then another one, I think is kind of in the same situation with, is this AVDL. Now it is a pharmaceutical stock. A lot of these drug stocks you got to be real careful of. They can be a little bit of a roller coaster ride sometimes. But this is kind of forming a little bit of a cup with handle formation, and it looks like it's breaking out of that cup range right there today. Now the rule of thumb is typically when they form this, that when they do break out of that cup, you can take the base top of the cup to the bottom of the cup, project that distance upward. Doesn't mean it goes straight there, and it doesn't mean it always gets there, but it has a tendency to work its way towards that. Let me back out and look at the longer term chart here. So looking at the longer term chart, well, you got a couple things here. This is a nice inverse head and shoulders pattern. So there's the neckline of that. It broke through it, pulled back to it right there. You got this little cup with handle formation, but you do have resistance up here, which is not quite the same distance as the top of the bowl, the bottom of the bowl, projected upward. So, but that's a pretty, if it holds this breakout, there's a pretty good probability it gets back up into here. So I do like that pattern. It does look good. The only problem, again, you got to weigh in, is that it's a pharmaceutical or biotech pharmaceutical type drug stock that, man, these things can move up very quickly, but they can come down very quickly. Look at that big move up right here, big move down right here, big move down here, big move up here. Like I said, they can be a little bit of a roller coaster ride, and that may not be what you want to jump into in when you're trying to preserve capital within a bear market. All right, construction. There's a couple here that I like. KB Homes, KBH, 91 strength rank. The same thing, a little bit of a cup with handle formation. Now again, on these, you could wait for the breakout, especially if you're a little bit worried that markets are stretched a little bit. But that's a type of pattern I like to look for. And what would be nice to wait for a breakout is you'd have probably an easier management. You break out, you buy the breakout, put your stop right below here. You're risking this much, and you're expecting it to go, that far. Roughly a 2-to-1 reward to risk. If I got in here, I'd be probably know that I'm wrong down here, and that's a pretty wide risk. That'd be one of the benefits of kind of waiting to see if it breaks out. Not to mention the fact we're in a little bit of an overbought market right now. By the way, some of these you just throw them in a watch list and keep an eye on them. And you know, I don't always. I will be keeping a watch list, and some of these stocks I'll throw into a watch list. I'm not doing that right now just because I'm not wanting to be active. Sometimes if it's kind of like I know if I don't go to a store, I'm not going to go buy. I'm not going to spend any money, right? But I can guarantee you, if I go to a store, if I'm just going to go and look, I'm going to find something I'm going to want if I'm in that store, and it may, you know, many of you can relate to this. It's like if you can't afford something, then the best thing to do is not go put yourself in an environment where you're going to be tempted to go buy something, you know, or just if you don't need something. In the case of go into a clothing store, I can always find something that I quote unquote need when I don't really need it. But same kind of principle here. If I start putting stocks in a watch list, it means I'm going to want to start adding them, and then you're doing exactly the opposite of what you're trying to do in a bear market, which is stay in cash. But you know, if you want to, some of these you like, and you're looking for something to, you know, get into something at least, not that you're going to get wild, but you're looking for a trade, throw some of these in a watch list, and if they do trigger something or break out, I'm not paying attention to it, you can email me and ask me what I think of the chart or whatever. I'll be happy to give you some feedback on that. And I can't tell you what to do, but I can tell you at least if I like, you know, do I like the market conditions? Do I like the breakout on the chart? You know, I can give you feedback on stuff like that. The other one on construction here was HOV. Now this one probably needs a little bit of confirmation. What you could do on this one right here, I do like this is what we call a flag pattern or a pennant pattern, whatever you want to call it. You have this big run up right here, and then it's consolidated. You can draw a trend line right here. This is real easy to trade. You can wait for it to break above that trend line. And right here, you have kind of a horizontal base. And so if it breaks below here, that would be bearish. If it breaks above here, it would be bullish. And it should typically break in the direction of the trend it was in before, which was up. So you would expect it to break above here. But this is real easy to trade. It's like, wait till it breaks out. It's in no man's land right now, but if it breaks down here, just leave it alone and move on. It's still possible it could go higher, but you just have to, you get into, well, then you get the argument of why is it consolidating for so long? It should be breaking higher right here. And if it breaks lower, it tells you the sellers are suddenly getting active, which shouldn't be, that you don't want to see that if you're wanting to buy something. All right. So that one I like, needs confirmation though. Oil stocks, like we said, are starting to move a little bit. I wouldn't get crazy with these, but there is, if you look at Transocean, RIG is a ticker symbol, 96 strength rank. This is another one where I'd probably just draw the trend line right through here. See if it can break above that trend line. But you know, this looks impulsive. This looks corrective. And then if it can break out above here, well, actually, I'd look for a breakout above the trend line. Maybe a breakout above here too. If we can get that, because then you've got a break of the trend line, plus you would have higher low, higher high. It'd be acting more like an uptrend at that point. So probably around that what is that high for that day? So it's the high for that day was $7.13. It's like $7.15 or something that could break out above that. That would be maybe a good confirmation. In computer and technology, one at the top of the list looked good. 99 strength rank, SMCI. It's in a nice little uptrend. It had a little breakout right here, broke out, came back. Now it did go a little bit below it right there, but it's back above that breakout area. Now, this is one where if you wanted a little bit more confirmation, you could, if it wait till it goes back to a buy signal. It's pretty close to going back to a buy signal. I like that overall pattern. Nice little uptrend there. And again, this has been trending up as the market's basically been in a sideways range for the last while. So that's kind of what you're looking for, is stocks that what stocks are outperforming what the indexes are doing or the general market is doing. Are there some of these trends beneath the surface that we can start to see? And this is another semiconductor stock, but on semiconductor, 93 strength rank. This is very similar to that HOV pattern we just looked at. A little bit of a flag or pennant pattern. Wait for it to break out. Notice it's not a coincidence. It started to have horizontal support right here. That's where it had resistance back here. So if it does break above here, that'd be very bullish. Big run up here, correction, breakout. But it's not quite there yet. So, all right. And the one I'm going to probably add to my portfolio, aerospace, and this one already has a buy signal, and it's one I've talked about. Lockheed Martin, LMT. Now it has a little bit of a lower strength rank, down around 80, a little below 80 there, 79. But I like the pattern. We have a little bit of an inverse head and shoulders pattern. Now it hasn't broken out yet. I told you can wait for the breakout. Well, it did break out of the head and shoulders pattern. There's the neckline right there. It did break out above that, if you want to make that your argument. But what I like is just the management standpoint. If it breaks out above here, you could probably take the bottom of the head to whether you go to the neckline, or this is kind of a weird. You take basically that distance, project that upwards. A lot of room to run. I've already talked about how, not only are these a lot of other countries needing weapons, Taiwan and all that, and they're producing as fast and as much as they can. But there's also talk that the U.S. is maybe going to start building up, with some of this tension with China, and it seems like everybody's got tension all over the place now. It's starting to get kind of scary out there, but boy, as long as they manage their business, these guys are going to make money for a long time. So, but more importantly, I can manage the risk here. If I got in today, I get a stop down below here. Now, first of all, you look at, okay, the market has pulled back at times. This is when the market has been pulling back. This has just been moving sideways. When the market has managed to go up, it's gone up. So it would have to take a big sell-off. It would have to take a big sell-off probably for me to get stopped out, because it could come back down to this congestion area. I'm not stopped out yet, and there's a lot in this congestion area. Look how long. Let me erase some of these lines. Look how long it consolidated into here. If it broke below that, I'd want to be out. Something bigger is going on, And but the upside potential there, and yeah, could I wait for the breakout on this one? I could, but number one, I want to do something today. That's not a great reason, but it is when you have a class that's been waiting for something for a while. But it's also proven to me on market pullbacks, it's not pulling back much. So I don't worry too much about getting stopped out. And if I do, then because I probably want to be stopped out. So I'm going to add it to the portfolio. We'll take a look at the other stocks in the portfolio here in a second, but I'm going to click on this little blue plus sign up here, add to portfolio, stock specific class portfolio. I'm going to put my stop in. So below that congestion area was about 462. Now, this is a kind of expensive stock, so I'm probably only going to be able to get about 20 shares. Oh, yeah, that's right at the. I want to keep the amount at risk in that the amount I'm putting into the trade in that 7 to 10,000 range, right up near that 10,000 range, and I don't want my risk to be more than 1.5% of the entire portfolio. And so this tells me down here, portfolio percentage at risk, less than 0.5%. And now you do need to take a look at the dollar amount. If I get stopped out, I'm going to lose $576. That's too much. That's going to cause me to freak out. It's not going to cause me to freak out, but if you're out there and you're saying, oh, I'd die if that happened, then okay, then you just need to buy fewer shares. Get that amount down to what you can handle. You know, maybe it's half that. So, okay, you do 10 shares. Well, at 10 shares, you're only putting in 5,000 into the trade, and you lose 288 if you got stopped out. Now, again, it's also assuming that we'll stop out at that price. We don't always. Sometimes it could gap down, and we could end up losing more than. But those are things that are out of our control. So we manage what we can manage. And usually it's usually pretty rare. And like I said, a lot of times we can. Well, it's hard on individual stocks knowing when they're going to announce something and it's bad news and it gaps way down. Well, first of all, it doesn't happen very often. So it's bound to happen at some point in your trading career. It's going to happen. If you trade long enough. But that's why you don't have too much risk in one position. For one, is there's always that chance disaster could happen, and then you try to manage it the best you can. If you start getting market signals that are showing a possible pullback, maybe take some profits off the table or tighten up your stop, or like I said, it can't always protect you from a big drop, but you can. All you can do is control what you can control. I can't control a big move going against me overnight that came out of nowhere, but I can control. Do I have all my risk in that one stock, or have I spread it over different stocks and over different sectors? I can control, how much I'm allocating into each trade, so there's. You do what you can, and then there's going to be bad luck, good luck. What happens a lot of times is you'll get a big move down that was unexpected, and you take a big loss, and you're like, man, that sucks, and man, I wish I could have seen that coming. And it's like, that's bad luck, right? But then the next day, your trade, there's good news that comes out, it gaps way up, and you made twice as much money in a short amount of time than you were expecting. And it's not good luck. It's, man, I'm smart, right? Man, I called that. You see what I did? I called that. If you're not careful to recognize when good luck happens, then you start to think that it's all bad. It's either bad luck or I'm smart, right? Or I predicted it. And you get into that mode where you don't recognize good luck, and it will seem like everything is bad luck and everything's lined up again. The market just wants to destroy me. No. If you're giving yourself credit when you don't deserve credit. Good luck. Or being smart is when you thought that stock was going to move higher, and it moved higher over 2 or 3 months, and yeah, it trended higher like you thought it was going to do based on your analysis and all that stuff, and you told people ahead of time that that's what we were expecting. Okay, that's your being smart. But it coming out with breaking news, and it's something, it's going to have this brand new product that's going to change the world, and it gaps up $30 overnight. That's good luck. That's not has nothing to do with how smart you are. Make sure you recognize the difference. Otherwise, you will think that it's only bad luck that happens to you. But these things, the point is, these things tend to even out. So just realize that it tends to even out over time. So I'm going to go ahead and purchase this. And then let's take a look at portfolio here. Yeah, I don't have I very little exposure. And but I've got, let's take a look at each one. I've been in this one for a little while now, HTML. Now I think I haven't moved my stop. I've moved my stop up into here on this one. I'm looking to move it up into here, but I want to see a breakout first. I want to see this breakout, and then I'll probably move it up into here. Let me just double check that to see where that's at right now, but I'm pretty sure it's, my stop's at 31.45. Yeah, so see, it's back. I had moved it up, but it's right below here. And it has broken out of kind of this area with today's move, but it did that before up here, before coming back down. If it could kind of break out above here, which is very close, I'll move that stop up. And I can imagine I'll probably do it on Tuesday, by Tuesday, because we probably should know if it's gone higher by then. And then gold. I got in gold on this breakout right here, and then it pulled back, but I have my stop down below here. Here's the kind of the breakout area. I have it a little bit below there. Again, the next move would be to move it up, the stop up into here, which would basically be, well, it wouldn't be at break even because I got in right up here. I got in on that move, but it would reduce that risk quite a bit. But because I'm really bullish on gold, I'm not in any hurry to raise that, because I think gold's going to move up over time. I don't want to have too tight of a stop. But that could change if we start seeing the dollar start rallying, and it looks like it could be a near-term headwind. Maybe I'll look to maybe even just get out of gold, take what I've made or what have you, and get out. We'll see. Maybe if it pushes up into the right side of that extreme reversal risk. By the way, that's something you can use as a exit, or at least a signal to start taking profits out, to maybe take half your profits off the table or something like that. You can use those extreme overbought, oversold type indicators for some of those decisions. I also got into portfolio here. I got into this one last class, I think. Or did I get in on this one on Tuesday? I might have gotten in this one Tuesday. The FCX made a nice move up today. I've got my stop. I think I got it below here. This low and that low. I think it's down around here. Let's see if that's it. Unless let me see where I put that. 37. Ooh, I've got it down. I've got it down around here. So you got this congestion through here. You got this low, this low. My stop's right around here, which that's a good spot. giving it plenty of room. I can always move it up. So that's where we're at right now. And again, this is not, I'm not claiming that this is well diversified. It is diversified, but I would say it's well diversified. I've got two basically mining companies, so that's they're in kind of the same sector. This is in the computer and technology, and then this is defense, aerospace. Now, you know, I'll usually in bear markets too. Number one, you're not usually going to be loading up with trades, but also very often when I trade bear markets, I don't worry too much about diversifying, because typically in bear markets, there's most of the sectors are trending down, right? So what you're trying to do is find sectors that are going opposite, trending up. What did we do most of last year? We were trading oil. Okay, we had tons of oil stocks. Well, not tons. What we had was mostly oil stocks. We were really confined to that sector. Well, because that's the sector that was working, and it did okay for us for the most part last year. But you know, that's the I don't start worrying about diversification in because otherwise you're forcing yourself into sectors in a bear market you shouldn't be in because they're not working, but you're like, but I'm diversified, I got to be diversified. No, you're going to manage it by having most of your money in cash. Okay, that's how we're going to manage it. Most of our money in cash. And then if we do have things in, let's just get into whatever's working, even if it's just, if I have 2 or 3 stocks in it, I'll diversify by having 2 or 3 stocks in the same sector. So it's not all in one stock. I'll diversify that way. But I'm not too worried about diversification when I'm in bear markets. In fact, I'd rather not be diversified and be in a sector that's working and proving it's working than just diversifying for the sake of diversifying. All right. I got to wrap things up. If you have any other questions, just send those to jerry@traderspro.com. I'll be happy to answer those for you. Have a great week. See you on Tuesday for the next market update. Bye, everyone.